I think you can see now that mindset in many ways is more important than strategy. Because look, there's so many ways that you could blend colors, right? At the end of the day, if you don't have any impulse control, oh, look at this. Here's a comment. First of all, Corruption V1, who's a subscriber, thank you very much for writing in, has written two comments. One, I just found your channel and I can already see that you are a complete legend. Of course. Thank you so much for your guidance. If I'm a legend, oh my gosh, thank you so much. I don't feel like one. That was for how to build confidence in your trading. Second comment just moments ago came in. When discomfort is the more beneficial choice. Again, that was last Friday's episode. I know this sounds crazy, but following my rules is actually my discomfort. That's what I've been saying for the last, whatever, 5, 6 years. It is so hard not to take an impulse trade. So you have to think in that moment, all right? Mindset is more important than strategy. This is a situation where without the strategy, perhaps everything looks really, really good. You know what I'm saying? And you need the impulse control. We talk about gratification. If you're struggling with this, one of the things that you could do is start to look at price now as the indicator. Why do you get into a trade? What's your entry signal? If you're struggling to fight the impulses, set a rule that says, I need to enter, if I'm bullish, a trade on a breakout that has a 5 period high. I have mixed emotions about this, admittedly, because I think when you're looking at short-term data, it's very, very random. And I know this type of strategy works in longer time frames, especially daily. Typically, the longer, the better. But you need to set up a rule around your entries so that it stops you, or at least gives you an intellectual understanding of how to stop taking flyers. Because if you have bad impulse control, you could be buying and selling anything on a whim. But if you put in a barrier to entry, a speed bump, if you will, that says, okay, whatever it is that you're looking at that you need to have right now, it needs to make a 10 bar high, 15 bar high, a 3-day high, something like that. Put some kind of governor on the price. Because again, we know that lower prices don't mean better value, right? You're not a CFA. And after diversification, momentum is your best friend. If you're trying to buy momentum stalls because you're trying to look smart, or you think, that lower prices bring in more value, you're probably learning that the hard way. And it's not funny because there was a time where I thought that too. I had to test it, and it didn't work for me. But again, the feedback that I get via email and the comments on the site, it leads you to think that mindset is more important than strategy, right? Because if you had a strategy, right, here's the thing. You know that somewhere out there, there's an equation that has positive expected value. It already exists. The goal for you is to experiment to find which one. So that every day that you come into work and you boot up your machine and all your monitors, whatever you got going, lights up, there's only one trade, and that's your setup. Many of you go, I'm just going to go straight to the damn instrument like E-minis, MNQ, Russell 2K, because that's what I trade. I personally think that's a mistake if you're just starting out. I think you need to be much more flexible and much more pluralistic in your universe of instruments. Because when you can isolate just one setup, whatever that setup may be, head and shoulders up or down, cup and handles, I don't care what the hell it is, pick one that resonates with you and then look to find that one setup across as many instruments as you can. Because there's a reason why it shows up a lot. If you go in to find just one instrument, like any of these Dow Minis, E-minis, MNQs, this and that, you could put yourself into a spot where you're forcing trades because you have the fear of missing out, right? Especially if your buddy was short NVIDIA on Friday or long puts and you missed out. And so now you're pissed. You don't even know why you're pissed. You know how you get over that? Go make a big deal over that person. Congratulate them. Take them out for a beer. Buy them lunch. because the goodness that you put out is going to come back to you. If you have animosity around somebody else's success, is a problem, right? It's not coming from a place of abundance. And that's a mode of thinking. And in my humble opinion, I had to learn this too. Like, envy kills you. You have to celebrate the success in other people so that you can see it in yourself. It might not necessarily be one for one, but it's pretty damn close in my book. So I always make a point of saying, man, you nailed that trade. I could be in a 4% drawdown, whatever it might be, at some point in my career. And instead of, because it's hard to be in a bad mood when you're trying to celebrate somebody else's success. So mindset is more important than strategy. You need to be able to keep yourself on a leash. On another perspective, okay, say you had a lot of money and you were looking for someone to help you manage risk in the markets, whether they were investors, investment advisors, fee-for-service portfolio managers, or whether they were particular traders. If you looked at your behavior as a third party, would you hire yourself? And if you put in a rule, a speed bump on your buying, then you don't start taking flight. You think too much. This is the problem with people who are super intellectual. They start bringing in new data every day. And that causes them to have reconsideration. Well, yesterday it wasn't a trade, but this happened. And with no training, no CFA, no CMT, no degree in finance, right? No proprietary desk training, they're going to try to incorporate that data on the fly and make a really important decision on it when they're ill-equipped. They don't have the training. They don't have a feel. Worse, their risk management is all over the place. One trade, they're risking 5%. Another trade, they're risking 1%. Then the 5%, which they fell in love with because AI is going to the moon, it's going to change the world, it's down 7%, and they were reluctant to take the loss because they were so emotionally invested in the outcome of what that trade was going to mean for them, not just emotionally, right? So this is the model. When you get emotionally invested in the outcome of any particular trade, it's a poster girl, right? It becomes someone that you become infatuated with. So then what happens is the financial risk management side sets sail. It's going away. It doesn't exist anymore. And your goal is to make sure that the emotional and psychological and the financial risk management in and of itself is a unit. They're spouses. They go together like peas and carrots, Forrest Gump said. It's pizza and Coke. And one can't become detached from the other. They are conjoined twins. So when you get emotionally invested, that's why I say risk only small bits of capital, so that when you become a bonehead or continue to be the bonehead that you always wanted to be, and I've been there, you don't do any lasting damage to your portfolio. What happens then? You're down in a spot, you didn't honor your stop, you might have done even worse and negotiated with your stop and lowered it. And you can't kind of come to sell it because you know Monday it's going to rally back up and be above where you got in the first place. And this is a strategy that's going to kill people, honestly. It's worse than the worst disease that's out there. This is what kills people financially, is they don't have it in them. They don't put the thought process in. So again, mindset is more important than strategy. If you're following one particular setup and you use a price-based entry, that criteria has to exist before you want to put on that trade, despite how you feel. You might not want to put on the trade because you're in fear of losing. You might want to put on the trade because you think it's going to 10x your account. But if you use a consistent bet size and a price-based entry mechanism, it'll save you. But you have to have the will to do it. I'm not saying don't feel your feelings. That's impossible to do. Just know that they sabotage your account. And then what the hell it is that you're doing? What are you doing this for? Is your goal to accelerate your cash and multiply it? Or is it to bitch and bellyache and be a victim? No one needs those people. There's too many of them anyway. Anyway, if you like this video, check out these here.